Hello students, in today's video we will revise all the important questions of VIVA of term 2 practical exam class 12. First of all, we'll study what are the learning outcomes while preparing this project work. So the first is that you applied your theoretical knowledge to solve real life problems, and it has also helped in developing analytical skills and creative thinking. It also helped in developing mutual cooperation and team spirit. That means you all work jointly to complete this project, which has helped you to build team spirit. Now, what is the period of study of your project? It is from 1st April 2020 to 31st March 2021. What are the different tools of analysis? There are 4 tools: comparative statement, common size statement, ratio analysis, and cash flow statement. Now, what is comparative statement? It is a statement which compares financial data of 2 different periods, that is previous year and current year. Now, what is the objective of comparative financial statement? It makes the data or the information simpler and more understandable. It also indicates the trend. Trend analysis भी कहते हैं comparative financial statements को. What are common size statement? Common size statement express all the items of financial statement as a percentage or have some common base. Like if I talk about common size profit and loss statement, there we have revenue from operation as common base. And in case of balance sheet, we have total assets, or we can also say total liabilities as common base. Now moving next, the tools of vertical analysis. Vertical analysis is also known as common size statement, and horizontal analysis is also known as comparative statement. It is also known as dynamic analysis. Name the financial characteristics which are analyzed by financial analysis. So it's profitability, liquidity, and solvency. Now, what is the objective of financial statement analysis? It helps to measure the short-term solvency. That means whether the firm is in position to meet its current liabilities, to measure long-term solvency, to measure operational efficiency and profitability of the enterprise, and it also facilitates intra-firm comparison, that is comparison within the business, or inter-firm comparison, which means comparison with outsiders beyond the company. And it also helps to study the pattern position within the industry. Now, what are the limitations of financial statement analysis? We all know that it ignores qualitative aspect because it records only those transactions which can be expressed in terms of money. It is not free from personal biasness. Every accountant has his own way of treating different transactions. So might be at some time they are personally biased. It ignored price level changes because all the asset that I'll say will be recorded at historical cost, the price at which they are being purchased. So this way we are ignoring the current values. Also, it leads to window dressing, that is manipulation of books of accounts. Now, what is meant by cash flow statement? Cash flow statement is a statement which records inflow and outflow of cash and cash equivalent during a particular period of time. And which accounting standard governs preparation of cash flow statement? It is Accounting Standard 3 revised. The two objective of cash flow statement is that it highlights the change in cash position, and it also provides information regarding sources from where we have got the cash and application of cash, that where we are using it under various head, that is operating, investing, and financing activities. Limitation of cash flow statement. It ignores non-cash transaction. जो हमने limitation financial statement analysis की पढ़ी हैं वही यहाँ पर भी है. अगर data already manipulated है जब हमने अपनी financial statements बनाई, so it might give a wrong information in cash flow statements as well. What is meant by cash flows? Cash flows means the inflow or outflow of cash and cash equivalents. What is cash equivalents? These are the short-term, highly liquid investment that are readily convertible into a known amount, and the period in which they are being converted is usually 3 months, and they carry insignificant risk. Any two examples of cash equivalent? It can be treasury bills, commercial papers. How are various activities classified as per Accounting Standard 3 revised? So there are 3 heads: cash flow from operating activities, investing activities, and financing activities. Now we have to state whether the cash deposited into bank will result in inflow, outflow, or no flow. See, It is a no flow because we are just taking money from cash and we are depositing into bank. So we are just converting it into one form of cash or cash equivalent to another form. How do you treat profit or loss on sale of fixed asset for calculating cash flow from operating activities? See, loss on sale of fixed asset will be added back because we want to calculate our cash operating profit, whereas the gain on sale of fixed asset is being subtracted. Why do we add back depreciation to net profit while calculating cash flows from operating activity? Because depreciation is a non-cash transaction. So it has decreased our cash profit. That is why they are being added back while calculating net cash profit, which is operational in nature, as we're calculating it under head cash flow from operating activities. Now, how will you treat bank overdraft in cash flow statement? It will be treated as a financing activity. Yes, if we talk about increase in the value of goodwill, it will be treated as purchase of goodwill. Thus, it will be reflected as outflow of cash under head investing activities, whereas decrease in the value of goodwill is amortization of goodwill. That means goodwill written off, thus added under head operating activities. Under which type of activity will you classify interest paid on long-term borrowings while preparing cash flow statement? It will be added to net profit under head operating activity, and it will be subtracted as outflow under head financing activities. Now, give one difference between operating and investing activities. Operating activities are related to the business, that means purchase and sale of goods and services, whereas investing activities are related to purchase and sale of long-term assets. Now, what is the difference between financing and investing activities? Investing activities are related to purchase and sale of long-term assets, whereas financing activities are related to activities which are related to result in change in capital and borrowing of the enterprise. Give any two transactions which result into inflow of cash. कोई भी दो लिख दो, sale of goods for cash, cash receipt from trade receivable, sale of fixed asset, interest receipt, whatever. Give one transaction which may result into outflow of cash and on which may result in no flow of cash. मतलब अगर हम आउटफ्लो की बात करें और हम गुड्स बाय कर रहे हैं फॉर कैश तो देयर विल बी आउटफ्लो, और अगर हम वही गुड्स क्रेडिट पर बाय करते हैं will leads to no flow of cash. State with reason whether purchase of fixed asset on long term deferred payment would result in inflow, outflow, no flow of cash. It will result in no flow because we have purchased the fixed asset on credit. Give an example of activity which remains financing activity for every enterprise. Very, very important question. Payment of dividend on shares for financing or non-financing company or a manufacturing company is always a financing activity. Why separate disclosure of cash flow from investing activities is important while preparing cash flow statement? Because it shows the expenditure made with intention to generate future income. कि कितने पैसे हमने खर्च कर रहे हैं in buying of fixed asset which could facilitate a generation of income in future. When is interest received considered as financing activity? Again, a very important question. Interest received on calls in arrears by a company is considered as financing activity. Name the business transaction which affects both investing and financing activity. When the installment paid in respect of a fixed asset acquired on deferred payment basis include interest and loan. आपने किस्तों पे चीज खरीदी और उसमें इंटरेस्ट और लोन दोनों है, तो इंटरेस्ट इज क्लासिफाइड अंडर हेड फाइनेंसिंग एक्टिविटीज and the loan element is classified under head investing activities. State the extraordinary items under different activities. Operating activities में compensation paid to employees under voluntary retirement scheme, bad debts recovered, income tax refund. Investing activities में हमारे पास extraordinary item है claim against damage of fixed asset due to earthquake or flood, and financing activities में extraordinary item है buyback of shares. What is the treatment of proposed dividend? Proposed dividend of previous year are added under head operating activities and subtracted under head financing activities. Thank you for watching this video. Don't forget to like, share, and comment. Thank you.